Let's bring in 314 Research co-founder Warren Pies. Good to see you here. Welcome.
Yeah, thanks for having me.
So we're fundamentally, I think we have some questions, but technically we look all right?
Yeah, I mean, that's how we see it right now. When this whole tariff drama started, what we told our clients is basically you're not going to navigate this situation by psychoanalyzing Donald Trump. So, you know, our view has been you're going to navigate this with technicals, what the price is telling you and the message of the markets. And the message of the markets is overwhelmingly bullish right now.
Why so?
Well, number one, the sentiment backdrop is institutions don't believe in this rally right now. So if you look at like vol-targeted funds, CTAs, these systematic investors, they have not gotten back in on this rally. So that's the sentiment side. And institutions I talk to anecdotally share that opinion. And then technically, we've seen a lot of participation on this upside. Breadth, basically a combination of breadth thrust, which is a technical term for when a lot of stocks are going up at the same time, that we've really never seen and not had outstanding returns in the next year.
So you're saying at some point, because it's funny, what you're telling me anecdotally matches completely with what Adam Parker has told us in the last couple of days here on the set too, holding these dinners with institutional investors who are universally negative. What you're suggesting is at some point that money's going to flood into the market and take us higher.
Yeah, I mean, and you can model some of that out. And so that's what I do. You know, like at our firm, our clients are institutional, and there's a lot of skepticism around the rally for sure. That's what I hear anecdotally. So I hear what Adam's hearing. But when we look at things like vol-targeted, so these are vol-targeted funds is a very common way to manage risk, where they look at trailing vol, and it caused them to de-risk during the sell-off in April. And now, when you just calculate that out, they're going to have to add a lot of equity back. So, yeah, I think they're going to get forced back into this market.
What about rates? Do rates keep people out? Because, yeah, I mean, things can change, obviously.
Rates are that's the bear case, really, right? But I don't think that the fears in the bond market are overblown. And my honest opinion is that if you're going to fading fears in the bond market that are kind of existential, like we're going to lose the dollar's reserve currency and things like that, those are the kinds of fears that crop up at good buying opportunities. And so my view is that rates are basically stuck between two big forces, disinflationary cyclical forces. You have oil that's weak. Housing is kind of weak right here, no inflation from there, and then the labor market is softening. So that's disinflationary. I think the fiscal side is concerning, but I see rates being between 4.3, 4.6.
Oil had started to go back up, right? I mean, after it looked like it was going to steadily continue to go down, it actually had rebounded when we sort of figured out that, you know what, maybe the economy and the consumer is a little bit better and sturdier than we thought again.
Yeah, I mean, oil's trying to rally, but the problem we've seen, and this is my background, is crude oil.
Because we're above 61. I mean, it looked like we were heading, could be below 50.
Yeah, I mean, hopefully you can hold at 60, 61, but the problem, in my view, is that OPEC is adding so much supply back. So you were getting a double whammy. You got demand, and China has refused to fiscally stimulate their economy, even despite this tariff war. And so demand's kind of weak globally, even though the U.S. is okay. Mm-hmm. And then supply, you have OPEC just adding all this supply back. So, you know, to me, I think oil still has more downside than upside.
Even with the dollar even getting weaker, right? I mean, that's been a considerable story this year, too. The weakness in the dollar, right? Yeah. The inverse relationship between dollar down, crude up.
Yeah, absolutely. I mean, I think that relationship is a little overblown in the markets because we become such producers of crude oil to the United States, actually the largest producer in the world on certain metrics. And so when, you know, there's really this negative correlation is kind of broken down. All right.